Hello students, hope all of you are doing good. I'm back with the session on Corporate Accounting 1. This is our session number 2 where we are going to discuss upon the various journal entries we are going to pass in the time of issue of shares. As you know that the subscriber of the share capital, in order to pay the capital to the company, is given with the 3 to 4 installments. So the money is collected from the subscriber of the share capital from giving 3 to 4 installments. That installment is called as application stage, allotment stage and call stage. Each stage has its own journal entries, and the purpose of these stages are to raise the share capital of the company. We have already discussed the various journal entries that are basic in nature in the issue of shares. So, application stage for collecting the application money, and allotment stage for collecting the allotment money, and final call stage is for collecting the final call money. So, let us discuss upon the journal entries that has to be passed for collecting the application money, that is for the collection of application money, bank account debtor to share application account. Ultimately, the purpose of collecting the application money is to raise the share capital, and for transferring the application money to the capital account, we are passing one more entry, share application account debtor to share capital account. Students, here share application account is a temporary account. Ultimately, our goal or the purpose is to raise the capital. So, one credit entry to the share application and one more debit entry to the share application completely eliminates the temporary account called share application account. So, the entry after deducting or after eliminating that share application account is bank account debtor to share capital account. So, two entries in the application stages are quite common, familiar to you, that is bank account debtor to share application account for collecting the application money, and the second entry is for transferring the application money to the share capital, that is share application account debtor to share capital account. When it comes to the allotment stage, again there are two entries. One is to making a remembrance to the shareholders that their allotment money is due. So, constant notification will be sent to the shareholders whenever there will be allotment money due. So, for making an allotment money due, the company passes one entry. That entry is share allotment account debtor to share capital account. Again, students, the purpose of passing each and every entry in the issue of the share is to raise the share capital. So, share allotment account, again here is a temporary account. So, that we have passed for the allotment money due. We are going to again pass one more entry for collection of the allotment money. So, whenever the money comes into the organization, debit what comes in, that principle you are knowing. So, bank account debtor to share allotment account. So, the temporary account, share allotment account, will be getting eliminated by passing one debit entry and one credit entry. So, in an initial instance, we have passed one debit to the share allotment. Thereby, in the later case, we have passed one more credit to the share allotment, and thereby it gets eliminated, and the entry remaining is bank account debtor to share capital account. So, the two entries in the allotment stage is share allotment account debtor to share capital account for allotment money due, and for the receipt of the allotment money, bank account debtor to share allotment account. Last stage, that is call stage. So, in the call stage also we are going to have two entries for collecting the call money and for making a call money due. So, first entry will be for making a call money due. So, what is the entry we are going to pass? Share call account debtor to share capital account. Again, share call account is a temporary account which has to be eliminated, that can be eliminated when we are receiving the call money from the subscribers of the shares. So, whenever we are going to receive the call money from the subscribers of the shares, we are going to pass an entry bank account debtor to share call account. So, temporary account, share call account, will be getting eliminated by passing one debit entry and one credit entry, and the remaining entry will be bank account debtor to share capital account, and thereby we are raising the share capital. So, ultimately again in the call stage the two entries are share call account debtor to share capital account for the call money due, and for the receipt of the call money bank account debtor to share call account. So, let us discuss this concept by applying one problem, and the problem is P Limited was registered with an authorized capital of rupees 10 lakh. In the last class itself I have said you that authorized capital is a maximum amount of capital that the company can collect. It is mentioned in the articles as well as memorandum of association. So, authorized capital of a company is 10 lakh divided into 1 lakh shares of 10 each, out of which they are going to issue only 50,000 equity shares to the public. So, the face value of equity shares are 10 rupees, and this 10 rupees will be collected in 4 stages by giving 4 installments, and the installment given for a subscriber of the share is 3 per application, 2 per share on allotment, 2 per share on first call, and 3 per share on second and final call. So, this is how company collects the money from the public. So, you are knowing that for each stages we have to pass the entry. So, we are issuing 50,000 shares to the public of rupees 10 each, and the installment given is 3, 2, 2 and 3. So, let us pass the journal entry for the application stage, allotment stage, first call stage and final call stage. So, first of all, application stage. Whenever you are going to collect the application money, you are going to pass the journal entry bank account debtor to share application account. So, money comes to the organization, and you are knowing the rule, whenever there is an increase in the assets or whenever the asset comes into the organization, that account has to be debited. So, bank account debtor to equity share application account, and on application you are going to collect 3 per share on 50,000 shares. So, 50,000 shares into 3, 1,50,000 is the amount of application money collected. You are going to pass the narration, that is application money received on 50,000 shares, that is 50,000 into 3. So, what is the purpose of collecting the application money? To increase the share capital. Share application money is a temporary account that has to be eliminated. How it is eliminated? By transferring the application money to the share capital account. So, the entry for transfer of application money to the share capital account is share application account debtor to share capital account, and the amount of transaction is 1,50,000. Again you are going to pass the narration, application money transferred to share capital account. So, hereby we have ended with the phase 1, that is stage 1 of issue of shares application stage. Now, go for the allotment stage. What is the allotment money, or what is the amount of money you are going to take on allotment? That is 2 per shares. On 50,000 shares, 2 per share is collected on allotment. Let us pass the entry for that also. So, first entry for allotment money due will be equity share allotment account debtor to equity share capital account. So, whenever there will be a allotment money due itself, we are raising the share capital. We are in the belief that the shareholders will give the money, and thereby we are increasing the share capital. However, we are making a constant notice to the shareholders that from your side rupees 1 lakh is due. So, for the allotment money due, simple entry is equity share allotment account debtor to equity share capital account, that is 1 lakh rupees, and for the receipt of the allotment money, one more entry you are going to pass, that is bank account debtor to share allotment account. As I said, share allotment account is a temporary account that has to be removed by passing one debit and one credit, thereby you are making an elimination of share allotment account. So, the amount in a share allotment account is 1 lakh rupees. Now, we are going to have a third phase, that is call stage. Call money can be collected in 2 to 3 stages, that is first call, second call and final call. It depends on the problem, it depends on the organization, how many installment that has to be given by the organization. Some of the organization may give 3 installment, some of the organization may give 4 installment. So, it is completely dependent on the organization. So let us go for the call money stage. So for the equity share first call money due, so we are passing one entry, equity share first call account debtor to equity share capital account. So that amounted to rupees 50,000 into 2 per share, 1 lakh. Transfer that to the bank or collect that money. How we are going to collect that money? By passing an entry, bank account debtor to equity share first call account. Again here equity share first call account is a temporary account, we have to eliminate by passing one debit entry and one credit entry. So final call stage is as simple as that for the final call money due, we are passing one more entry, equity share second and final call account debtor to equity share capital account, that is 50,000 into 3. See, the final call money is 3 per share, right? Final call money is 3 per share on second and final call. So equity share second and final call account debtor to equity share capital account for the final call money due, that is 1,50,000. For the receipt of the money from the final call, you are going to pass one more entry, bank account debtor to equity share final call account. So this is the simple entries regarding the issue of shares. I am not discussing here the issue of shares at premium, issue of shares at discount. See, this is the basic set of journal entries you have to understand while solving the problems related to the issue of shares. Now, issue of shares can be done at premium or it can be done at discount. If the issue of shares are done at premium, what is the meaning of that? So, students, premium is very simple. If the shares are issued at a price higher than the face value, it is said to be issued at premium. Suppose, consider that share value has a face value of rupees 10. If you are issuing that shares at rupees 12, it is considered as a issued at 2 rupees premium. Actual value or actual face value of the shares was 10, you are issuing at 12 rupees. Now, if the actual face value is 10 rupees and if the company issues it at 12 rupees, whether the subscribers are purchasing that shares, of course they will purchase. When the company is reputed one, when the company is offering a very good percentage of dividend, in such a case, even though if the shares are issued at premium, the subscribers of the shares will be ready to take the shares. The premium so collected should be transferred or credited to separate account called securities premium account. It cannot be used for the ordinary purpose. The monies transferred to the security premium account cannot be used for the ordinary purpose. There are certain purposes on which the amount collected from securities premium account can be used. How the security premium amounts collected from the organization can be used. So, it can be used towards the issue of bonus shares. It can be used towards the writing off of the preliminary expenses of the company which was incurred while setting off of the business. It can be used while repayment of the shares in premium. It can be used in order to allow the discount, in order to pay the commission in the case of issue of debentures of the company. So, these are all the certain uses of the security premium account upon which the company has to be very careful. Other than these cases, the company cannot use the premium account likewise. Now, if the issue of shares are done at premium, what are the accounting treatment? See, usually the premium amount is payable with the installment of allotment. However, there is no hard and fast rule that it has to be collected from the allotment stage. But in most of the cases, this premium money will be collected from the allotment money. So, while collecting the premium money, as you know that it has to be maintained separately, it should not be combined with the share capital. The entry that has to be passed is share allotment account debtor to security premium account to share capital account. In the usual cases, we were passing the entry for the allotment money due, that is share allotment account debtor to share capital account. But while collecting the premium, there should be a separate provision for the premium in the name of security premium account, and entry will become like share allotment account debtor to security premium account to share capital account. And for the receipt of the allotment money, we are combining all the amounts. There is no separate provision for the security premium as usual. However, we are passing the entry in the recent cases. We are also we are passing the same entry, that is bank account debtor to share allotment account. So, for the case of premium, what is the entry we are going to pass? Share allotment account debtor to security premium account debtor to share capital account. If the issue of shares are made at a discount, what will be the provision? What is the meaning of discount? If the issue is made at a price which is lower than the face value, then that is said to be a shares issued at discount. Suppose if the face value of shares is 10 rupees and if the company wishes to issue that shares at 9 rupees, then it is said to be a shares issued at discount. Here 10 minus 9, that is 1 rupees, is considered as a discount offered by the company to the shareholders. So, what are the accounting treatment for the issue of shares at discount? Consider that allotment money have included with the discount. So, if the allotment money is included with the discount, how we are going to pass the entry? So, entry will be share allotment account debtor to discount on issue of shares account debtor to share capital account. See here, discount on issue of shares is an expense from the part of the company, and you are all knowing that the rule of nominal account is debit all the expenses and losses. So, that is why that expense of issue of shares, that discount is debited. So, the entry for the issue of shares at discount is share allotment account debtor, discount on issue of shares account debtor to share capital account. For the receipt of the application money, that is bank account debtor to share allotment account. Okay. So, I hope these things are clear for you guys. Once again, revise these entries, and the problems related to these journal entries will be done in the next class. Till then, take care, stay home, stay safe. Thank you.